What is up? So today we are going to be talking about inflation and real estate as an inflation hedge. Now, before we get into the topic, quick reminder, go ahead and hit that like button for us. If you're getting value from our content, from this video, hit that like button. It's going to help to tell YouTube that this is good content. That in their algorithms helps get this information in front of more eyeballs. Would greatly appreciate the help. As well, go ahead and subscribe to this channel. We're regularly putting out new content with the goal of making you a more educated investor, more educated real estate investor, and helping you, of course, on that path to financial freedom. So, now, that said, inflation. You hear a lot about inflation these days. How much is inflation? It's 2%. Oh, it's not enough. Oh, it's transitory. Oh, no, okay, now it's 5 and 6. Oh, now it's not transitory anymore. Is it good? Is it bad, right? There's all kinds of conversations taking place around inflation. The general age-old theory or thought behind inflation is that it is typically bad, right? There are instances, of course, where inflation can actually be good for people. So I really am kind of a firm believer that inflation is both good and bad, depending on your exact situation, very much like credit, right? Or going into debt. Going into debt to buy liabilities, I think, is really dumb. Buying assets with debt, I think, is really smart. So with inflation, if you own a lot of assets that are generally real assets, high yielding assets, inflation can be really good for you, right? You can go into an inflationary period with your assets equaling a certain amount, and then because of inflation, the value of all those assets go up, right? Making your net worth higher. In that context, inflation can be a good thing. If you have a ton of debt, high inflation is good, right? Because in effect, you're paying back your obligations with dollars that are of lower value, okay? So it's good for you as the debtor. It's not quite as good for the creditor, right? Well, if you're somebody who owns little, has very little in terms of assets, and you're living paycheck to paycheck, inflation can be crippling, can devastate you, right? Because the cost of everything is going up, and if your income isn't keeping pace with inflation, you are effed. Okay, so that's inflation really quick. We can go into a lot of different conversations about it. That's not the point of today's video. The point of today's video is to talk about how real estate serves as an inflation hedge. This is kind of age-old thinking here of real estate as an inflation hedge. So, real estate, when done the way that my team does real estate, we're going out and we're acquiring large multifamily apartment complexes, okay? We have got a lot of paying tenants in our properties. And so as inflation increases, historically, your rents tend to increase along with inflation. Many times, those figures will be close. In a lot of instances, the rent growth can actually exceed inflation. So check this out. November 2020 to November 2021, inflation in this country, in the United States, was 6.8%, okay? 6.8% inflation. During that time period, rental real estate across the United States, one-bedroom rental units saw a 21% year-over-year, same exact time period increase, and two-bed units saw a 16% increase. So if I owned a piece of real estate and was generating my income through rents, I am way out ahead of inflation. 21 versus 6.8, 16 versus 6.8. Either way you slice that, the rents far outpaced inflation, okay? Not only that, property values have risen during this time period. So your piece of real estate is generating monthly income for you, okay? So your investment in real estate is actually paying you every month, assuming that you bought it correctly. And so you're making money there, and the money there that you're making is actually outpacing inflation. Now, in addition, your property values are also increasing as inflation increases. Again, historically speaking, we're talking about keeping pace approximately or outpacing that inflation. So while your money or your friends may have their money in a 401k that is returning them 3 or 4% while inflation is 6.8, they're actually going backwards in net worth, right? If everything that they owned was collecting 4% and inflation was at 6.8, you understand they'd be worse off at the end of the year than where they started, right? Whereas in our case, we are outpacing, we're getting revenue coming in every single month from our tenants. That money we can then take to either pay expenses, we can save that, we can go out and buy additional investments that also serve as an inflation hedge, or we can just let it ride and reinvest that capital into the property, right? So we're outpacing from the rents that are coming in, from the increase in value in the property during our ownership. And it is for those reasons, right? Real estate is a basic human need. There is never going to be a time where there is not a demand for housing. And so it is those reasons that real estate is generally viewed as an extremely strong inflation hedge. If you find yourself concerned about inflation, it's not transitory anymore, according to the Fed, which means it's probably here to stay. At least for the foreseeable future. If you're concerned about how that's going to impact your nest egg, your investments, and your net worth, and you're interested in learning more about how investing in multifamily apartment complexes can help you hedge that risk, hedge that inflation, then we should definitely link up. You can find us at investorboardroom.com, and we look forward to serving you. Take care.